All right, let's get right to it. The date is January 21st, 2026. This is an urgent intelligence briefing, and we're focusing on the single most important conflict shaping the cybersecurity sector today, the Great Consolidation War. And to really set the tone, look at this quote. This is CrowdStrike's CEO, George Kurtz, taking a very direct shot at Palo Alto Networks. It tells you everything you need to know about the aggressive, no-holds-barred nature of this market. The gloves are completely off.
So let's frame this conflict. You see, the old days of security teams trying to manage, 50, 60, even 70 different vendors, that era is dead. What we're in now is a ruthless consolidation war. It's a battle for the very architectural soul of the modern enterprise.
Now, this is really the heart of the matter. You have two completely opposing doctrines. On one side, you've got Palo Alto Networks, PANW, led by Nikesh Arora. Their strategy is platformization. The whole idea is to end tool fatigue with massive bundle discounts and just rip and replace everything. On the other side, you've got George Kurtz's CrowdStrike, or CRW. They're all about the single agent. It's a thesis of architectural purity. Their single, organic platform versus what they call Palo Alto's Frankenstein of stitched-together acquisitions.
And make no mistake, this isn't some theoretical debate. This number right here, this is what's fueling the fire. A survey from late 2025 showed that 90% of IT leaders have made software consolidation a top priority. The market is screaming for fewer vendors, and the giants are responding.
So here's the crucial takeaway. The battlefield is split right down the middle. Palo Alto Networks, with their aggressive pricing and bundles, is winning the procurement battle. They're winning in the C-suite with the CFO. But CrowdStrike, with its elegant architecture, is winning the technical battle. They're winning the hearts and minds of the security operations teams, the folks who are actually in the trenches doing the work every single day.
Okay, now let's follow the money. Let's see how this war plays out in the hard data. Because in today's high interest rate environment, there's really only one metric that matters: profitable growth. The numbers tell the real story of who has the firepower to win.
And the key benchmark we're going to use to measure the health of these software as a service companies is the Rule of 40. It's simple, really. You just add the revenue growth percentage to the free cash flow margin. Any score above 40 is considered elite. And as you're about to see, some of these players are in a completely different league.
And this matrix just lays it all out. You see, CrowdStrike, strong as ever, 29% growth, a very healthy Rule of 40 score of 59. But then, just look at Palo Alto Networks and Zscaler. The Rule of 40 scores are a staggering 85 and 78. That's a story of incredible financial efficiency. And even SentinelOne, S1, has managed to get to positive cash flow, which is a big deal. This chart really shows you the weapon Palo Alto Networks is using to fight this war. An adjusted free cash flow margin of 69%, that's almost unheard of. This isn't just a number on a spreadsheet. It is a war chest. This is what funds their acquisitions, and it's what gives them the power to offer those aggressive discounts that are defining their entire platformization strategy.
So looking at that Rule of 40 scoreboard again, the picture becomes crystal clear. Palo Alto Networks and Zscaler are operating at a level of financial efficiency that is nearly double the industry benchmark for what we'd call an elite company. This allows them to invest and apply pressure in ways that smaller competitors just can't keep up.
But there's a really critical counterpoint to this financial story. Remember that catastrophic global outage CrowdStrike had back in July 2024? Everyone predicted a mass exodus, but instead, they kept over 97% of their customers. That is a massive validation of their technical value. It proves how sticky their platform is. Customers basically decided the product was just too good to leave, even after a disaster.
And that brings us right to the technical battlegrounds, because financials are lagging indicators. They tell you who won yesterday's game. The technology, that's the leading indicator. That's what tells us who's going to win tomorrow, in 2026 and beyond.
Right now, the biggest technical prize is the SIEM market, Security Information and Event Management, and it's another two-horse race. Palo Alto's Cortex XSIAM is going for the business win. It's promising an autonomous SOC that reduces human labor, a pitch that CIOs love. Meanwhile, CrowdStrike's Falcon LogScale, with its blazing fast, index-free design, is scoring the technical win, with the SOC analysts who live and die by raw speed.
You know, in 2026, the entire value proposition of AI has fundamentally shifted. We've moved way past simple AI detection. That's just table stakes now. We've even moved past the AI co-pilots of the last couple of years, the chatbots that help analysts.
The game now is AI agents. These are autonomous systems that don't just answer questions, they actually execute tasks. This is where the real pricing power is now.
But of course, this isn't just a duopoly. We need to analyze two other key challengers, Zscaler and SentinelOne, and figure out where they fit in this brutal consolidation war.
So, what's the bull case for Zscaler? Well, it's pretty powerful. First, they have arguably the purest zero-trust architecture out there. That really resonates with security folks. Second, you have that elite Rule of 78 financial score. And third, their product is incredibly sticky. Once you're in, it's very hard to rip out. That's a formidable combination.
But there's always a bear case, right? And for Zscaler, it's that their core market, SASE, is getting incredibly crowded. Competitors like Palo Alto are bundling it in at deep discounts, which threatens to commoditize the whole space. And their lack of a strong endpoint agent, that's a pretty big gap in an era where everyone wants a single, unified platform.
All right, now for SentinelOne. The bull case here is that they're the value player for more cost-conscious companies. Their Purple AI is a genuine innovation leader when it comes to user experience. And that recent shift to positive free cash flow, that's a huge de-risking event for the stock. Plus, trading at a low sales multiple, they look like a prime acquisition target.
The bear case, though, is pretty stark. SentinelOne is caught in what we call the squeezed middle. They just don't have the massive platform breadth of Palo Alto or the market dominance of CrowdStrike. In a winner-takes-most market, being number 3 is a very, very dangerous place to be. You're fighting a two-front war with fewer resources.
So let's bring this all together. What is the final verdict for 2026? The state of the cybersecurity union is clear. It is a robust market, but it is also absolutely ruthless.
Takeaway number 1. This is a winner-takes-most market, period. The gap between the big three, Palo Alto, CrowdStrike, and Fortinet, and everybody else is not just there, it's widening. Scale and capital are creating an almost insurmountable advantage.
Takeaway number 2 is the AI pivot. This is huge. Value is shifting away from charging per seat and towards charging per outcome. It's no longer about how many people use your software, it's about what that software does. Autonomous agents that replace labor are changing the entire economic model of security.
And that leads us to the final strategic implication for all of you. The old basket approach, buying a collection of best-of-breed point solutions, that playbook is dead. The alpha, the real opportunity for outperformance now lies in backing the dominant platform consolidators.
Which leaves us with one final critical question that you have to answer. In this consolidating market, where does the true alpha lie going forward? Is it with the massive platform consolidator who can bundle, discount, and scale? Or is it with the pure-play innovator who still offers the absolute best-in-class technology? That is the core thesis every single investor in this space must now decide.